Good afternoon, this is Jonathan Satovsky of Satovsky Asset Management. On September 22nd, 2016, giving a video blog update on the state of the world and financial markets. I wanted to start with going back to my idea of mindset. Today there was a AAII sentiment survey, which comes out every week, and the sentiment numbers were 24% bullish and close to 38% bearish, which is considerably lower optimism than what we normally see, as the historical averages are 39% optimistic and bullish and 30% bearish sentiment. And it's not a surprise because the three major focal points of the daily media junkies are talked around the Federal Reserve, the election, and valuations. So let's tackle the three very quickly. First being the Federal Reserve. Well, yesterday the Federal Reserve decided not to raise interest rates to keep monetary policy loose. Why and what does that mean? Well, they're trying to keep things accommodative to incent risk-taking. And since the vast majority of the population is not interested in risk-taking, as witnessed by money flows, there's been net negative flows out of equity markets this year. They want to keep things encouraged for that purpose. The elections, it's a toss-up, but the one thing I would say about the elections is both candidates agree that infrastructure spending is critical. Infrastructure spending on roads, bridges, tunnels, high-speed internet, a lot of different things that are going to revolutionize our internal infrastructure that is, in desperate need of major renovations. And the last is valuations. People concerned that valuations are propped up because the Federal Reserve has kept interest rates loose. I want to tackle this quickly by saying the way the S&P 500 values the market, Apple being 3% of the S&P 500, does not reflect, even though they have $45 billion of earnings, there's $45 billion in losses in four energy companies that represent 0.023% of the S&P 500. So essentially wiping out all of the earnings of Apple, for example. So the PE ratios that people follow as a widely followed measure is extraordinarily misleading. And lastly, I'll just give you a bigger picture view. This is the global bond markets and this is the global equity markets. As of the end of 2015, the global bond markets had $36 trillion in debt and the global equity markets had $45 trillion in equity value. Well, if you think of a household balance sheet and you want to look to develop further health, you have two options: eliminate debt or grow the equity. And that's it. So in order for the whole world to prosper, we need to focus in tandem, all the central bankers, all the innovators, all the entrepreneurs, all the workers of the world. Everyone has to focus on how we can innovate and create growth and new opportunities. And if you look around, there's abundance of opportunities that are happening every single day. And I'm beyond excited about the future, and I hope you are too. Have a good day.